Good morning. I'm Christy Duffy for SmarTrend News. Today is Wednesday, August 11th, and this is your opening bell market update. U.S. stock futures are trading lower this morning after the Federal Reserve stated late yesterday that the economic recovery is slowing down, stoking concern from investors. The Fed said it will start buying government bonds using money from maturing mortgage-backed bonds bought during the recession with the intention to cut interest rates on mortgages and corporate loans to increase borrowing and help spur growth. Taking a look at market futures this morning, the Dow Jones Industrial Average futures trading 134 points below fair value, the S&P 500 futures 16 points below fair value, and the Nasdaq Composite futures are trading 26.5 points below fair value. Now for more perspective on what's happening in the markets today, let's turn it to Andy Zamfotis from Legard Capital. Good morning, Andy.
Morning, Christy. Well, yesterday the market did recover some of its losses after the Fed reported that it was not only going to keep interest rates low for a considerable amount of time, but also reinvest some proceeds when these mortgage-backed securities mature and put that money back into the Treasury market or other securities and keep its balance sheet at roughly $2 trillion. So that did inspire a rally kind of mid-afternoon, but then it faded. And we're seeing that kind of disappointment carry over this morning as now investors are really focused on what the Fed called, modest recovery here. And so that downgrade's got some people spooked, and we're seeing the Dow futures down about 100 points below fair value. The Treasury market's also reacting. We're seeing the 2-year yield now below 0.49%. That is another new low, and the 10-year is now at 2.7%. These are kind of deflationary yields, so that's kind of at odds at what the equity market had been looking at kind of as we were going through the second quarter earnings reports. Speaking of earnings, yesterday after the bell, Disney did post better than expected earnings of 67 cents a share. Analysts were only looking for 59 cents. Revenues topped estimates as well. Today we do have a big earnings report after the close today. Cisco reports the expectation is for 42 cents a share. That's up from 31 cents. And as is typical, everyone, traders usually listen to what the CEO John Chambers has to say on the call and what he's seeing for the economy, as Cisco does have its hand in a number of different industries. So it looks like a rough start to the morning. Europe's already down 2%. We haven't closed below this 200-day moving average on the S&P, which is right now at 1115. We've managed to kind of stay above it even on these big down days. We managed to rally above it. So the question is, will we close below it, and what that will portend for the rest of the week and for the rest of August.
Thank you, Andy. I'm Christy Duffy for SmarTrend News. For more news and market analysis, make sure to subscribe to our YouTube channel, Trade the Trend. Also visit our website, tradethetrend.com, for more headlines.